Hi, I'm David Armstrong. I'm managing editor of wealthmanagement.com. I'm here with James Hunt of the Tocqueville family of funds. James manages the International Value Fund. Thanks for taking the time.
It's good to be here.
So tell me about the International Value Fund.
So the International Value Fund is a contrarian value fund, purely bottom-up investing, stock picking outside of the United States. We're benchmark agnostic, truly absolute return investors. We carry about 50 positions typically, and we're looking for good businesses that are out of favor for the wrong reasons and trading at a deep discount to intrinsic value. We invest across the market capitalization scale. Typically we have a larger concentration in large caps, but we also historically have added a lot of value in small and mid caps. And what we're expecting of ourselves is we're going to do better than the benchmark over the course of an economic cycle with less than market volatility. And indeed, that's what we managed to do historically.
About 60% or 50% of your assets are in Europe?
That's correct.
And that's a tricky place to be these days. What do you see going on there?
Well, actually, as a long-term investor, I think Europe is a very good place to be looking right now. The price movements between the United States and Europe, the divergence has never been larger than it is right now. Valuation discrepancies have never been larger than they are right now. The European markets are clearly discounting a recession, and if there's not a cataclysmic financial event in Europe, I think this will turn out to have been a great time for long-term investors to buy stocks.
You're optimistic about the future of the Eurozone?
I wouldn't say I'm optimistic. I think that business in Europe is a lot better than the macro prognosticators would have you believe. I was there last week. I met with about 12 CEOs of large European companies, and I'll tell you, business is not as bad as you would imagine from what you read in the press about what's going on a macro level. There's a lot of very good companies, well managed for cash flow. They do business all over the world, not just in Europe, and they're discounted, they're trading at knockdown valuations simply because their address is in Europe.
Yet you stay away from the financials in Europe.
We don't invest in financials. Generally speaking, we don't like businesses which are opaque, where we can't understand where the cash flows are coming from, and which are financially leveraged, and financials are by definition. So we don't do financials, but there's a whole lot of really good companies in Europe to invest in, trading at knockdown valuations today.
Mm-hmm. In Japan, many of your holdings are in Japan. I think your top holding, Hitachi, is a...
We tend to find a lot of really good opportunities in Japan. Balance sheets in Japan tend to be overcapitalized, which is something that we like. Japan, broadly speaking, is going through a multi-year transition towards more efficient business management and better disclosure. And on top of that, a lot of Japanese companies have large exposures to Asian growth. And so we found a number of best-in-class global businesses in Japan that export everywhere, and in particular to Asia, trading at very attractive valuations with good balance sheets.
Can I ask you about Canon? You recently made an investment in Canon, correct?
We've held Canon for quite a long time, actually. Canon is an interesting company. They're absolutely best-in-class global manufacturers. It's trading at around 3.5 times enterprise value to EBITDA. They've got more than cash than debt on their balance sheet. They're best-in-class in what they do, which is business machines, components for copiers, and also SLR cameras. I think that the stock has been punished recently because I think people are worried about the effect of iPhones on SLR cameras, and we view that as being two completely different markets. So it's a good example of a misplaced concern knocking down a valuation and creating an opportunity for us.
Exactly. All right, well, thank you very much for taking the time.
It's great to be here. Thank you very much.